Mindcypress. Education beyond boundaries.
Now, let's understand pillars of an effective AML program. The regulators have very clear expectations from the bank's AML program. Section 352 of the USA Patriot Act, 31 CFR 1020.2.1.0, defines the five pillars of an effective AML program as: first is policies and procedures, development of policies, procedures, and controls. Second is an ML officer designation, designation of an individual S, responsible for managing BSA, an ML compliance. Third is training, ongoing training program for appropriate personnel. Fourth is testing, independent testing of BSA, an ML compliance. And five is customer due diligence, identification and verification of beneficial owners. The FFIEC-BSA, an ML examination manual, provides guidance for establishing policies and procedures to strengthen the pillars. Number 5. Customer due diligence. The CDD procedures became effective in 2018. These procedures are applicable to banks, broker-dealers, mutual funds, future commission merchants, and introducing brokers in commodities. All the fives are: requirement to understand the nature and purpose of the relationship for the objective of developing a customer risk profile. Requirement to identify the beneficial owners and controllers of legal entity customers. Number 4. Testing. Evaluates compliance with the bank's own policies and procedures. Tests compliance with legal and regulatory requirements. Evaluates whether the program is written, implemented, and effective. Number 3. Tailored to roles of employees, senior management, and board of directors. Ongoing incorporate current developments and changes to AML, and provide applicable examples of money laundering, ML. The purpose of training is to keep professionals up to date with aspects BSA, AML laws and regulations, policies and procedures. The following documentation should be maintained to be inspected by the regulators: training and testing materials, dates of training sessions, attendance records. Number 2. An ML officer designation, designated by board of directors, responsible for coordinating and monitoring day-to-day BSA AML compliance, should be fully knowledgeable of BSA and understand the bank's business. Regularly updates board of directors of ongoing compliance with BSA. Number 1. Policies, procedures, and internal controls. Financial institutions should have policies, procedures, and processes related to risk assessment, know your customer, KYC, transaction monitoring, suspicious activity reporting, SAR, currency transaction reporting, CTR, foreign bank and financial accounts report, international transportation of currency or monetary instruments report, purchase and sale of monetary instruments, record keeping, funds transfers record keeping, AML training, information sharing, independent testing, source, FIC BSA AML examination manual, BSA AML compliance program. Now, let's discuss risk assessment. Risk assessment is the foundation of an effective AML program. The bank's risk assessment should be designed to measure overall AML risk and identify and mitigate gaps in controls. Consider, at a minimum, risk from customers, products, and services. Geographies have cadence for communication of results to business, management, board of directors, appropriate staff, have a result-driven development enhancement of internal controls. Now, let's understand AML spectrum of activity. A sound anti-money laundering AML program identifies and reports suspicious activity and protects the financial system from illicit actors. Financial institutions are responsible for verifying a customer's identity, developing a risk profile, and monitoring a customer's transactions. Faced with increasing scrutiny and pressure from regulators to meet AML regulations, entities have made significant investments into their AML compliance programs. AML programs aim to meet two functions: prevention and detection of money laundering within an institution,